Live from Bloomberg's world headquarters in New York, I'm Tim Stanovac, and welcome to Bloomberg Crypto. Look at the people, transactions, and technology shaping the world of decentralized finance. This hour, we bring you interviews from the second annual Wyoming Blockchain Symposium, just days before the Fed's big meeting in Jackson Hole, as crypto makes further moves into traditional finance. We'll have exclusive interviews for you. First up will be one of the hosts of the event, Kraken CEO Arjun Sethi. Plus later, Securitize CEO Carlos Domingo joins us to discuss the rise of tokenization. That's all ahead on Bloomberg Crypto. First up, a check of how Bitcoin has been doing over the past couple of weeks. Flat over the last couple of weeks, but that kind of disguises what actually happened because, folks, we hit a new all-time high for Bitcoin just last Wednesday, more than $124,000 last week, but it's since pulled back just a little bit right there, down about $10,000 since then. Going into that last week, it rose due to some institutional investment interest led by these so-called digital asset treasury companies. Simply put, these companies just buy and hold Bitcoin. It's something we've covered quite a bit here on Bloomberg Crypto. Not just Bitcoin, though. Ether also close to a record high last week as it saw record ETF inflows. You can see those right here at this part. This was after months of underperformance. Ether delivering triple-digit returns in the 3 months through July. Now to our exclusive coverage from the Wyoming Blockchain Symposium. Joining us now is Kraken CEO Arjun Sethi. Kraken and Salt hosting the symposium this week. Arjun, good to chat with you again. I know you weren't at the event last year, but I imagine the vibes even this year quite a bit different given the regulatory outlook, given the excitement, and of course, given the price increase that we've seen in so many of these digital assets. What are the vibes like?
Look, I think you just have a large amount of tailwinds from what you saw last year, obviously with members of Senate, members of House, et cetera. And so you have a lot of excitement between folks that are here in the United States and outside the United States thinking about what's going to be the next evolution of building on blockchain, building on crypto, building with global liquidity in mind. So the vibe here is great. Like, we're in Jackson Hole, Wyoming, right before the meeting with the rest of the Fed, and you just got a lot of excitement in the room.
What do you think is the next evolution of this technology, the next evolution of the blockchain? What's your view?
So I mean, we're really early. We just had at the symposium, we kicked it off and we started talking about global finance and what's going to happen in the ecosystem. We had a very U.S. look at it, and then we had a very zero-sum look at it, which is, the value of Bitcoin is going to be more synonymous with gold. And our take has been more that Bitcoin is a protocol, it's a network, and you have another set of protocols like ETH, et cetera. And that the way in which we think about it today is very linear, and it's hard to think about what is exponential and super linear. And so the way I think about it is that we're just in the really, really early innings of what's going to be trillions of dollars coming into the ecosystem, building against it, and then the value continuing to grow.
Can you explain more your thesis behind Bitcoin being a protocol or being something that you build on? Because I don't necessarily hear that from people who buy Bitcoin or necessarily see that, because right now it just looks like people are using this as a way to build wealth. They're buying and they're holding because they think the price will continue to go up.
Look, whenever in history you've had anything starting to grow at a certain velocity, people have different interpretations of what it means. And so the first version of what you've seen in crypto, Bitcoin, which has been the default, it's an on-ramp and off-ramp into crypto, has been that, like, this will be the store of value and this is where I think I can make money. So you have volatility across the way, and you've also seen the asset continue to grow. I think there's a certain amount of people that want to perpetuate that. Then there's just what is the technology of what you're allowed to be able to do with Bitcoin and how that's going to continue to be perpetuated and preserved. And so remember, look at the original thesis of the Bitcoin white paper. It was to be a hedge, but at the same time it was sending and receiving payments. So you've got a lot of folks coming at it from different angles. When you have a lot of folks coming at it from a different angle, and it's a protocol, and it's a network, and it's a store of value, there's just so many different applications that are going to be built around it and within it. Then there's the next set of folks that are thinking about how to build around it, which is what we've seen with ETH, then Solana, the list kind of goes on. So they're all, combined together. And I think what people miss is that we're just in the early innings of what the market cap is, in the trillions today. What happens in 5 years? What happens in 20 years?
I want to home in on that point that you made about this being something that is used to exchange for goods or services. As you said, it was in the white paper more, than a dozen years ago at this point. Are we seeing that play out at all right now when it comes to Bitcoin specifically, or are people just buying and holding it? I'm not seeing prices denoted in Bitcoin by any means.
That's right. Well, there's some folks that are trying to take, payments in Bitcoin, but I think the overall, arching thesis today and the usage is, buy and hold, and then watch the value accrue. But you are starting to see people try to bridge against it and build against it. And so it's really early. Most of this innovation you see is happening outside the United States, but a lot of what we're trying to figure out is how do we bring it into the United States, keep it here, control it here, and perpetuate it here so that innovation continues to grow in the United States.
One more on the market, and then I want to get to Kraken specifically and the roadmap and sort of theory and strategy there. Where do you think we are in the cycle, given there has been so much pull forward since the November election, and on optimism over the regulatory environment? You mentioned just at the beginning of our interview the optimism around that. Where do you think we are in the crypto cycle? Are we at the top, or is there more room to run higher?
Look, I wear another hat, chairman at Tribe Capital, and one of the first things I tell any entrepreneur that I work with is the word hubris is really important as you grow. And so as you grow at a high velocity, a lot of people will think about your company as as a prime candidate. And so what happens is you think about the supply and demand of any type of valuation. When there's more eyes looking at something, the value of that asset tends to accrue. And sometimes that's not healthy. So where we are in the market, when I think about where we are in the market with crypto, we're really, really early in the slope, but it doesn't mean that you won't have any ups and downs and volatility along the way. And I would say that if I was to just look at it from a pure numbers perspective, I think we're in the middle of the road. And the more we get market structure, the more we get market stability, the more inflow of capital that comes in. I mean, take a look at the DATs. You can make an argument that it's good for the ecosystem. We can also make an argument that there's a lot of folks that are, sort of thinking about crypto fast and loose. And it reminds me, and it's reminiscent of what you saw in 2020 and 2021, where the disciplined approach around building a business starts to go away and it trickles away. And so I think, the way in which we carry ourselves is more about what's the disciplined approach to making sure that we're catering towards our customers. What do they need, rather than speculation? So I think we're in the middle of the road, but it doesn't mean that we can't have hubris in this category over the next year or two.
Hey, before we go, I want to try to get some updates on how you're thinking about the road to a publicly traded company at Kraken. Can you give us an update on your IPO, when it will take place, any bankers, size, anything, color around that?
Sure. Look, I think people use the word public markets as if it's like a race to an exit. And we're private, we stayed private. We've raised less than 25 million in capital since 2011, and we've been able to stay disciplined. The way we think about our journey along the way, private or public, is that is it in the best service to our clients and our customers? If the answer is no, we won't go public. And so there's no real update there. It's just that we're profitable. We give our quarterly updates, and we want to make sure from a counterparty risk perspective, trust is the currency that we care about.
What are your takeaways from recent IPOs of firms in the space? Circle, for example, we saw bullish last week. The investor appetite was certainly there for that one. What are your thoughts?
If I use the framework of intrinsic value versus options value, my personal belief is that a lot of these companies in the crypto ecosystems are option valued, so they're overvalued in my perspective. And in some cases that is a good thing, and a bad thing which is you're getting more attention, and so you know more about what's happening in the industry. But I think it's really important to just take a look at how are these companies growing efficiently, where do they make their money, where do they not, and where do the losses accrue. And so again, taking a step back, how do these companies actually grow the industry? How do they grow themselves? And are they actually providing intrinsic value to themselves and their shareholders is what matters most.
So which companies do you look at and say those are overvalued?
Well, I mean, I think any company that gets into a category of a meme tend to get overvalued. I don't think that's necessarily good or bad. You just take a look at the numbers and say, like, does it actually make sense for where they're going to be in 2 years, 5 years, and 10 years? So I don't have any specific perspective on which one is overvalued. I just think the world of crypto has become more overvalued with the DATs and the companies that have been going public.
Yeah, it's been pretty wild to follow this just over the last few months, and what a difference we've seen in a little, over a year at this point. Hey, one more for you on the public markets and what's happening there. Are you concerned at all about all the companies that are going public sort of taking away interest from a potential IPO for you, or sort of taking the air out of the room when it comes to investors who want to invest in a company that is in the crypto space? By the time you get there, maybe the interest won't be there because there are so many others.
Well, I've been around a long time in Silicon Valley, and I think what you've seen is that there's a race. It's kind of, let me put my idea on a napkin and raise, tens of millions, $100 million, put a .com at the end of my company and take it public. I think good companies get valued because they're good and because they're able to continue to execute.
Arjun Sethi, Kraken's CEO. Always good to see you, Arjun. Thanks so much for joining us on Bloomberg Crypto. Well, coming up, another exclusive interview. Securitize CEO Carlos Domingo talks to us about industry tailwinds for tokenization and why his firm, he says, is positioned to be a winner. And earlier, Fed Governor Michelle Bowman spoke to Bloomberg at the same conference about loosening crypto regulation.
What we're doing is we're taking the learnings that we had from that group and we're integrating it back into our Reserve Bank examination teams so that they understand that as Congress overwhelmingly supported the passage of the Genius Act, these are very, very acceptable activities, and they're of course legal because we're working on developing frameworks that will allow for digital assets to exist both inside and outside the banking system in a way that is unquestionably allowable activity.
With people, we're willing to work with people who are taking different approaches, but it's really important that people be very careful about disclosing what the nature of the asset is. When you tokenize something, it's still a security. If you're tokenizing a security, it may be a security with different characteristics, and that's something that needs to be conveyed to investors.
There you have it. SEC Commissioner Hester Peirce on the show last week highlighting the need for regulation of tokenized assets. Well, earlier I discussed the future of tokenization with Securitize's CEO Carlos Domingo. We started with Wall Street adoption.
I think all industries needs to digitize, they get digitized, right? And financial services industries, for the most part, a lot of the capital markets infrastructure and products, they're still running in technology from the 70s. So I don't think anybody questions that you need to modernize that infrastructure to be able to move products and settle trades and access investors, etc., in a much more efficient way. And at the end of the day, capital markets boil down to like updating ledgers and how people, move the ownership of assets in a ledger, and that's what a blockchain technology and tokenization brings. So it's the most suitable, most modern ledger technology, ideal for modernizing capital markets.
Yet, and let's focus on the tokenization portion of this. I hear you. Yet, J.P. Morgan recently out with a report that it's essentially a little bearish on the technology. It says that demand from Wall Street on tokenized assets just hasn't taken off. What do you make of that?
I think that most of the adoption for tokenization today is still within the crypto ecosystem. That's where the majority of the people that are kind of using the technology and adopting tokenized assets are. It is to some extent true that it hasn't trickled down into like mainstream Wall Street. That doesn't necessarily mean it's not going to happen. I think it's just a much more complicated problem because you need to get, wallet infrastructure and blockchains, etc., integrated with existing, legacy infrastructure, and that usually takes longer than creating new markets, which is what is happening today. But it will definitely happen. As I mentioned at the beginning, digitization is an unavoidable fact for all industries. So.
When do you think that'll happen?
I think it's going to get accelerated because now we have stable coins that have, become, legal with the Genius Act. We've had the recent administration and the recent SEC basically, clarifying a lot of the perhaps more gray areas with respect to tokenization, about how transfer agents use a blockchain technology for their ledger, or how the broker dealers can do custody of tokenized assets. And I think this is going to significantly accelerate. So I see that happening within the next, 3 to 5 years for sure.
SEC member Hester Peirce was on our show just last week. She said the market is going to sort out the winners when it comes to this technology. How do you make sure that Securitize is one of the winners here?
Well, look, we have been doing this longer than anybody because we started the company in the kind of first wave of tokenization in late 2017, and we are the one that has first the most comprehensive set of capabilities and licenses to be able to tackle the tokenization problems, which are very complex. And second, we are the only one also that has institutional adoption. Our customers are the largest asset managers in the world, like BlackRock and Apollo and Hamilton Lane, KKR, etc. And that gives us a competitive advantage that now that there is further regulatory clarity will, probably ensure that we continue leading the industry as we've been doing it for the last few years.
I want to talk a little bit about the retail side of this technology. You probably guess I'm going to ask about Robinhood because the company's been pushing for broader adoption of tokenization. Earlier this year, Robinhood announced that some of its European-based customers could start trading tokens that represent shares of U.S. equities. Kraken and Coinbase are also talking about using this tech. How do you view their efforts specifically?
I think tokenization of public equities is a very interesting problem, especially when it comes to broaden the distribution, the access for international markets. I think that these early projects that have been announced, and some of them already existing, they're a bit misleading because they don't really tokenize the equity. They're just derivatives or wrappers that give you kind of price access, but not the real assets. So I think that we're in the very, very early days of deciding how the tokenization of public equities is going to happen, but I'm very excited about it, and we've been also participating in the space, and I'm very bullish about the potential.
Should those companies be allowed to release or offer these so-called wrappers?
Of course, if they do it in a legal way, there is nothing wrong with it, right? So I think that there's obviously some people that are playing regulatory arbitrage to create these wrappers in offshore jurisdictions to bypass US regulations. I don't think those should be allowed. But in the case that the wrapper is properly constructed and it follows with all the regulations and disclosures, there is nothing wrong about it. Whether the existing wrappers, all of them do that or not, that's a different question. But I think that people deserve to understand exactly what it is that they're buying to make sure they know that they're not actually buying the real stock, that they're not going to get access to dividends, or they're not going to get voting rights and things like that when they're buying a wrapper, as opposed to when they buy the native tokenized equity from a company.
That was Securitize CEO Carlos Domingo. Coming up next on Bloomberg Crypto, we'll be joined by Caitlin Long of Custodia Bank. We'll talk about competition in bank charters for crypto firms. And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
I think this is the most important time in American history for the evolution of this innovative opportunity. And frankly, we're passing bills. We're not just listening and talking, we're actually getting things done.
That's, of course, Senator Tim Scott at the Wyoming Symposium earlier talking about Washington's interest in crypto. Meantime, more and more crypto firms are applying for national trust charters. Let's discuss with Custodia Bank CEO Caitlin Long. She joins us from the event. Custodia is a software platform with a bank charter. It serves as a depository for crypto settlements. Caitlin, good to see you today. Custodia Bank has been working on this for years at this point to get access to a Federal Reserve master account. Right. Now a host of crypto firms are applying for national trust charters with the same goal. What do you think of those efforts?
Not surprised. It's a really great business model to cut out intermediaries and just go straight to the core settlement infrastructure for the US dollar, which is operated by the Federal Reserve. And you've got to be a bank to have access to that. There is an attempt to be a non-bank, in other words, a trust company less than a depository institution, i.e. a bank, in order to get access to those rails, and we'll see if that succeeds.
Do you think it will succeed?
I think a lot of crypto companies who have applied for those trust charters will get them. I think the path to a Fed master account, to getting root access to Fedwire, is a much bigger question, and it's going to be a long haul. Both Kraken and Custodia applied for our Fed master accounts almost 5 years ago.
Wow. Yeah, it's been interesting to see this happening with crypto, because if you think about fintech, a lot of fintechs don't actually want to be banks. They want to partner with banks. Are we seeing crypto firms actually want to be banks, or do you think it'll be sufficient to partner with banks such as Custodia?
Well, most of the fintechs are interested in these trust charters so that they don't have to do a state-by-state licensing and regulatory regime. If you can imagine that these fintechs have been dealing with potentially 50 different exams every year. So the concept of being able to have only one exam every year is pretty meaningful. So that's why the fintechs are interested in the trust charter. But it doesn't necessarily get root access to Fedwire. Legally under the United States, there are 3 different types, basically, of financial institution charters. There's banks, then there's trust companies, then there's money transmitters. Most fintechs are money transmitters. You're seeing, as you point out, a number of crypto companies graduate up from that to trust companies so that they can get federal preemption, but very few are applying for full-fledged bank charters like Kraken and Custodia have.
Hey, Caitlin, we only have 30 seconds left. We're going to have to get more time with you soon, but briefly, one concern that some have had is about a deposit flight risk when it comes to stablecoins and them entering the financial mainstream. In your view, very briefly, is this overblown, or is that a real risk?
Absolutely overblown, and the banks that are worried about it should stay tuned. Custodia is working with Texas's Vantage Bank. We've got a solution to that, and it's going to be compelling for the banks. Come join us.
Well, come back on Bloomberg Crypto and do chat about that soon. Really appreciate you joining us. Apologies that it was so short. Custodia Bank CEO Caitlin Long joining us from Wyoming. That is going to do it for Bloomberg Crypto on this Tuesday. Join us again, though, next week, same time, same place, for another edition of Bloomberg Crypto. This is Bloomberg.